So today, what I plan to do is briefly recap what happened over the last week and what's happening over the past 15 days in the market, and see what could be the potential price action for the next week. Okay, and we'll also see some popular tickers and see where they are right now, and is there still juice left in those stocks. We'll take a look. Before I start anything, right, go deeper, right? How many of you are familiar with, or how many of you know how to read this chart? So this is a stock chart for some company called TradeWeb, but regardless of the stock, but how many of you know how to read these candlesticks?
I know how to read it, but how to make
Uh,
use of the patterns is what is the difficulty for me now, right? I'm still learning that.
okay, good, good. At
Yeah,
least you
yeah,
know how to read the candlesticks. That's good.
yeah, yeah, yeah.
Anyone don't know what is mean by candlestick here so far? Okay, looks like everybody know. That's good. So this is a weekly chart. What you're looking at is weekly chart. I'm going to switch to daily chart. Okay, daily chart, and let me adjust the perspective here. Auto, cool. All right. I have a predefined watch list that I keep adding. This gives me a sense of where the market is going overall, right? So I'll show you. You can also use these. I can share this watch list to you. You can also keep flipping through daily ones and see how to read it, right? So some of the indicators are significant, some of the indicators are not significant for a swing trader. So some are just noise. It could be just the noise. So be careful what you are asking, right? So you need to know what you are looking at. Some of the things, a few basic rules for how market behaves, right? So a few very basic rules. So one is if oil is going up, right? So that is USO as a good proxy for oil. If oil is going up, market usually goes under pressure, right? So it is a long economic story, right? If oil is getting pricey, then companies are going to make less money because everything costs more, right? So that means all the indexes will go down, right? Generally, markets go down. If oil is going up, market is going to go down. And similarly, if volatility, which goes by VIX, if VIX is going up, then market goes down. That means it's an inverse relationship between all the USO, the oil, and VIX, and also a couple of other indicators which are also exhibit this inverse relationship, which is treasuries. If the treasuries are going high, that means some sort of uncertainty is what is going on, and that's why nobody's buying US government bonds, and they're all expecting bigger interest rates or bigger yield. That's why treasuries goes up. That means market is under pressure because some uncertainty. So treasuries, oil, VIX, these three, typically if they go high, then you want to pay attention. And if market is still ripping higher, one of them has to be right, right? Typically it is treasuries that win they'll take the precedence, and you can expect market to go down at least in the next following days. Okay. So I look at those three to begin with, right? VIX, right now you can see the price is clearly going down, right? It is in the downtrend. There could be here and there fluctuations like what you see here, right, on 23rd April. But quickly it rolled over, right? So VIX rolled over and it is right now going down. And if I add SPY as a, let me remove this. So you can see the relativity here. Let me delete this. Okay. So you can see the relativity here. So as the VIX is going down, this is the market here. So SPY, just as an example, right? So this is going up. SPY is going up. Okay. TNX, which is 10-year treasury. If this is rolling over, then market going to go up. And similarly, USO, if it is going down, the market is going up, which is good. Oil price is coming down. But now what concerns me is oil price is going up. market is also going up, right? Who is right? Typically the oil, right? Unless people anticipate that war is going to be over and then oil is going to come down and the market will win, right? So that's a possibility. Everything is a theory of possibilities here, right? So we go by historic evidence, which is like typically when the oil goes high, then market goes down. Okay. And other factors that I look at is put to call ratio. Okay, put to call ratio, and for those who are familiar with options, you have calls and you have puts, right? So calls means like somebody's betting bullish on the specific equity or specific index, and puts means someone is betting that price is going to go down for that equity, right? Vice versa, basically. Put versus call ratio. And put versus call ratio here, right? There are a bunch of put to call ratios in the market, of one for across the market, one for equities, right? So you can just look at one, right, and use it as your benchmark, right? So when the put to call ratio is usually right goes above a degree of, it's like a inverse ratio, right? So if it is greater than zero point 0.5, for example, that means like puts are dominating in the market. And if the calls are dominating, then you should see, because it's a calls are denominator, right? The value should be lower than zero point 0.5. So less than zero point 0.5, obviously it's a super bullish conditions. If it is more than zero point 0.5, it is bearish conditions or borderline. But if you want even more concrete evidence, then if the put to call ratio is more than zero point 0.8, right, then that's a signal for getting worried. Okay. So zero point 0.8 or above indicates that, hey, someone is betting really, really heavily bearish in the market. So that's why they're buying more puts than calls. That's why the ratio is higher. Okay. So that's another signal. And remember, none of these, whatever I said so far, right? So none of these are, what do you call? They're not signals. Okay, they're all giving you information. That's about it. Okay, but that is not your criteria for buying stocks or selling stocks. These are all just information to have some background in the market. And other factors that I look is number of stocks. For each platform, these indicators could change, but you'll find one or other equivalent. If you are using Thinkorswim, which is Charles Schwab tool, let me pull that up. Okay. Are you able to see my Thinkorswim? You should see a different screen now, different tool.
Yes.
Okay. So here, right? So if it is Thinkorswim, then it is something called like a SPXA 50R or SPXA 200R, right? What it tells is number of stocks in SPY or S&P 500, right? Number of stocks that are above their 50 period moving average. Okay, that is given by the symbol. And SPXA 50R, you have to append dollar in front of it. Now here it's historically, right? This is my my way of tracking how they are. So I usually set up alerts on these lines. So if it is more than zero point 0.8, then I look for bearish, right? So why? Because you can see that, right, as things are overheated in terms of buying conditions or could be bearish conditions, right? So you can see this. That usually indicates pressure on the markets. And as it is rolling over again, right, markets will either go down or go up, depends on where you are in this oscillator. Think of it like an oscillator. It oscillates between top and bottom, top and bottom. So if it is to bottom, right, so 0.17, what does this number tells, right? Let's understand that. Number of stocks in S&P 500 that are below 50 period moving averages. If you think about it, if the number of stocks that are below 50 period moving average, that means like it's extreme bearish conditions, right? So usually stocks that are above 50 period moving average, right? That means like, okay, there is some sort of a stability or some bullish conditions persist in the market, but now everything is going below, right? That's bad. Oftentimes what happens when when there is blood in the street, right? There is opportunity. So that is the opportunity as a trader we should be looking for, right? Instead of getting into the dooms theories, right? We should be looking for opportunities in the market. Where can I put my money so we can go high, right? So that's the whole philosophy behind this markets usually. Unfortunately, that's how the mind works. Even there is a war, people are dying. As a trader, you would be looking for opportunities to make money. Okay, that's it is what it is. Okay. So here, if you notice here, right? So there is extreme bearish condition around March. Now let me switch to trading view. What happened in March, right? This is extreme bearish condition. Look at my crosshair where we are, right? Extreme bearish condition and market dropped at 632. Okay. So because of war or because of tariffs or because of any stupid reason, right? So it is going down, and then your put to call ratio is telling you that, hey, I am under stress, right? A lot of stocks are under 50 period moving average. Let me switch. 50. Okay, here, this guy. So it is down, and you can see that as it's hitting below, that's your opportunity. That's your cue, right? That's your cue. You don't have to, sell the house and put money into the market, but at least put some money to work, right? At that point of time. If it is going below, you can set up an alert and then put money into the market. It will test your patience because oftentimes, if you notice here, market went down here as well, right? This indicator, the so-called 50 period moving average below, right? So this indicator gave me a signal on 20th March. Had I invested my money, right? Where are we? 647. Then there is a brief relief. Yeah, I'm right, right? You'll get a sense of satisfaction, and then dropped, right? Doom. So where I'm getting at is what gets oversold can even more oversold, right? What gets like it could get worse before it gets better, right? So that's why it is important not to time the market. That is why everybody says, like, don't time the market, right? Have your own specific criteria when you're entering, have your own exit criteria when you're entering, right? When you take a position, be sure what is your exit conditions. So these are just signals. That's why, right? These are not your cues for entry, but more of a signal, right? Keep an eye, right? And now as market is moving higher, right? Rather than catching the absolute bottom, do not try to catch absolute bottoms. That's the recipe for disaster, and probably want to remember this for life. So do not try to absolutely time the bottom. If anybody says like, yep, I timed the bottom, good for them. It's not us. Okay. And it's not going to last. That success won't last. Here, if I absolutely timed my bottom, yes, I'm awesome because it went up, but next it went down, right? So nobody's right. So unless you know your time frame, when you're getting a position, then you should know your time frame. Like, hey, I am taking this position, say like in Nvidia, and I'm planning to hold it for say like an year. Then you don't want to look at daily chart. You would be looking at weekly chart because your time frame is an year. You want to hold for an year, right? So daily fluctuations will only introduce noise into your mindset, and you don't want to keep looking at daily chart and get worried about every minor fluctuation, right? So you want to just buy and hold for a 1 year, but still, what is your exit condition, right? Is it like a 10% of your entry price? If it is below your entry price, 10% below your entry price, then you want to exit, or what is your exit criteria, right? So, and if you notice, I keep talking about losses, right? What if I'm wrong is what I'm more worried about than what if I'm right. Okay, so this is the market where it will suck your money in no time for being optimistic or hopeful, right? This market is ruthless. So that's why you want to think in terms of downside protection rather than on the bullish side. Okay. Um, so that's why you always need to think first in terms of, like, what is your risk? How much I am willing to lose by buying this equity or index or whichever that you want to buy, right? How much you're willing to lose, right? So we always think about appreciation. That's how our brains are wired. But remember that things will go worse before it gets better, right? So you want to think about the worst condition so that you can survive and thrive when there are better conditions. So think about the worst case, which is how much I'm willing to lose whenever you want to buy. And vice versa. When you want to sell, like for those who are into shorting, right? Yeah, for those who are selling, again, same story. How much you're willing to lose if the stock or specific instrument, financial instrument here, goes higher than your shorted price, right? You need to have an exit condition before you even think about entering into a stock. Okay. So everybody has a sweet spot in terms of how much you are willing to lose, how much your mind can tolerate, right? That's the number you want to arrive with before entering any position. So two key takeaways for the last 5 minutes what I talked. Do not time the markets. What you're looking at is they're giving you information. They're not necessarily a signals or a clue to enter. Okay. So now going back to our 50 period moving average, stocks above 50 period moving average, you can see that in overheated conditions, everybody's talking about overheated conditions, but I don't see those overheated condition, at least in this, right? So it is here on this specific 16th May and July, and again, next one is like, January, but I don't see that conditions yet. So if this indicator moves up to 70s, that's when I will be worried. Right now, it's not. Okay. Next one is for near-term traders. There is a 20 period moving average also, right? Stocks above 20 period. So that is, I think, TWTY. Okay, I don't remember that. So, but there is one for 20. So that shows overheated in the short term, right? So it depends on your time frame again. For those who are swing traders who are looking for catching the moves, and for like typical window is like 3 to 15 days, right? So 3 to 15 days for those 20 period moving average is more relevant because stocks above 20 period moving average is more relevant. Okay. For those who are like position traders, 50 period moving average probably makes more relevant for them, right? For you to track. And for those who are long-term investors, then it is 200 period moving average. Okay. Now I look at these. Now some of the something caught my eye last night when I was looking, which I posted in the Discord. I'll explain that real quick. HGY, not that. GIG. Yes. Okay. So this is the one. Um, uh, Again, these are all, I think of them like, gold standards throughout, right? So uh, HYG indicates it's a high yield corporate bonds. Okay. And oftentimes this is called as like a smart money. Okay. Big guys, the big guys, pension funds, large pension funds, your BlackRocks, and JP Morgan, right? So they are the one who participate in this a lot, and oftentimes they're considered as a smart money or also institutional money. Okay, so if you notice here, market and market is like SPY, QQQ, or Nasdaq, or Russell 2000, or Dow Jones, right? All these equities are considered as a dumb money, right? So it is like all the retailers get to participate in these equities. That's why it is dumb money. Okay, so here what you see, what we are looking at is like tracking divergences. What is mean by divergence? Um, price one is like when the price goes high, right? And for high yield price, for example, here, if the price is going down and the stock is going down, there is no divergence here, right? It's all aligned together, right? What is the opposite of divergence? I don't recollect, but that is what it is. Okay, so it is going down and going down. There is no info. I mean, there is nothing to notice here, right? They both are going, hand in hand. That is good. No issues there. But we track when there is a divergence. Okay, so here the price is going down for smart money, and for dumb money, price is going up. And who's going to be right here? Smart money, right? So they know something, and that is why they kept selling onto the strength. Market is dipping higher and showing enormous strength in specific sectors. We'll get into that sectors as well. But it is displaying enormous strength in the specific sectors. But they are selling. right? That means someone is taking profits. So it doesn't mean that we are calling it as a market topped here and it's going to crash next 20% or 30%. And we're not saying that. But there is divergence forming. Again, another piece of information that you want to capture and keep in the back of your head. That's all. Okay. And oftentimes this leads to correction. Okay. Oftentimes this leads to correction or pullbacks, right? Correction could be a heavy word here, but it could means that it is a pullback is coming potentially. Okay. And I'll show you another picture where I will be drawing these different divergences, so you can track where all there is divergence and how the market has behaved, right? We can simply track here also now. So for instance here, right? Visually, you're going to look for the cues. Okay, usually you can look for the cues, and here there is no divergence here. Okay, it's all aligned, no problem there. But if it is something, you'll see market is going to keep ripping higher, but it will, this divergence is shown clearly in most of the times. Not super evident here, but I'm going to show it to you. Okay. I will track this. I'll zoom it up and then I'll draw those and show it to you so that you'll understand what the divergence means and how it's going to look like. And similar divergences do exist in other indicators also. Like you'll see RSI divergence and MACD divergence. So you'll see all sorts of divergences in the charts. So those are another piece of information, but just for the context, again, all of this is just for the context. You want to do it probably once in a week or so, just to get an idea. For those who are into this, right? You can track these indicators. You can add these tickers into your watch list and just keep an eye, right? What's going on. If this is not your jam, that's okay, right? You'll get a weekly summary from me. Maybe if there is enough interest, then I plan to have weekly calls like this. Let me take a check. Am I making sense? Am I going too fast? Or, am I making sense at all? Just want to get some feedback.
It is. It is too much information, but it is definitely making sense.
Okay. Okay.
It'll take some time. I think more calls would be good, right? Where we
Sure. Yeah.
again,
Yeah.
I'm a very novice trader, so for me it is too much information. I don't know about for everyone else.
Yeah, I
No,
have to
that's good.
definitely go back through this video again.
Okay. Okay.
Good.
Good. Good. Okay. So I'm going deeper. So DP, what about you? Same thing?
Yeah, I think I mean I'm pretty passive in investing, but actually it can correlate to some of the learnings that I had made a long time back. But I think this information is good. The thing I'm realizing is like I need to do a lot of homework by like replaying this video and collecting all that
Okay. Got it.
indexes and the keywords.
Cool. Makes sense. Yeah. All right. Then in that case, right? So yeah, okay. So since we want to review the market, right, in a short term, that's the reason I brought up all of these. So this week, as you notice, the key takeaways probably, you can ignore all the technical jargon that I said so far, right? And instead, the key takeaways so far, right, based on what I talked, it could be as simple as market is heated, it is showing some signs of weakness, and smart money is selling into strength. So the key takeaway for all of us is next week, as we are heading into next week, right? We don't want to stay overly bullish. You will keep seeing people posting their P&L charts or their positions which are making like 1,000%, 2,000%, 10,000%, right? So don't get FOMO into positions. Okay. An example, AMD. Okay. Everyone is talking about AMD making all-time highs and going crazy, right? Same story with all semiconductors, right? Marvel, that is like again going parabolic here, or Intel is going parabolic here. Okay, so you will keep hearing about people saying like, "Hey, I'm making money," and every day they're getting in, or they could be good traders or they could be gamblers. You don't know, but you'll keep hearing only the profit stories, success stories, right? So be careful with that. Don't get tempted and get into a long position and be a bag holder. That's the takeaway. Okay. Even if you want to play next week, right? Generally, if you plan to buy 100 stocks, let's say, right? If you plan to buy 100 stocks, right? But there is still an itch to get into the market because it's going high, right? That's the temptation we all will have generally, right? So instead of buying 100, maybe you could cut it down to one fourth. So that's going to be the piece of advice moving forward into the next week. Okay. So any trade signals that I provide in the Discord, same story applies. You want to cut down the position size because market is due for a pullback. I've been saying this since last week, but it's not happening. So that's like historic times. Wherever you see, everybody will start saying like, "Hey, we never seen this before." Soxel semiconductors going high back to back for 17 days or 16 days. That is a history, right? We never had this before. So this is a historic time. And is it going to last? Maybe. If it's not going to last, what are you going to do? You bought something, what are you going to do now? If your time horizon, if you're an investor, probably okay. You're fine. Yeah, given enough time, everything can work in the market, right? So Intel, for those who invested 25 years ago, right? If they have waited, they're still living, then they would enjoy this all-time high, right? So, but do you have the time? That is what you need to figure out. Okay, I think the free version has only 45 minutes limit. We are running out of time. Okay, so I think that summarizes what I want to say. Then next week, going into next week, right? All the trading alerts that is provided, unless it's exceptional quality, right? Let's say like some companies coming up and say like, hey, I have a magical cure for weight loss. Just one pill is going to get you weight to normal weight, right? So some sort of that miraculous catalyst. Uh, Other than those, right? Rest of them, you're going to take one fourth of the size. Okay, and also have a strict stop losses. It is what it is. If it gets stopped out, you're not going to lose a lot of money. Instead, right, you will still be participating in the market if it is going high. Okay, so there is time to be greedy. This is not the time to be greedy. Be cautious.
I think earnings are around the corner, right? May 5th for AMD. There's some more earnings for ARM as well.
Yeah. Peak earning season is
So
coming up actually.
yeah.
Yeah. So if you
Gotta watch
see,
that.
we have many earnings coming up actually. Too many earnings. See here, a good earnings are, this is good website. You can all have earningswhispers.com. It is free. It shows the information about earnings. And I think AMD is coming up. And also, um,
Amazon,
Am- Am-
Google.
Amazon, Google is coming up. Yes, UPS, Spot. UPS is good in terms of transportation. And then optics, everybody's talking about photonics, right? For those who are you familiar with the photonics theme? What's going on right now?
No,
Okay, data centers, everybody's after data centers. What's working in the market? Data centers. What's not working in the market? Anything other than data centers, right? So that is what is going on right now. Data centers, data centers. Everybody's after data centers and shortages, right? CPU shortage is what anticipated. That's why Intel is running and AMD and ARM is also running. All three of them are running. Congrats, Kapil, by the way. So all of these are running. Okay. So because of the CPU shortage, okay, and also data centers. The fever of data centers is what's going on right now. In order to build data centers, it takes a lot of, think of it like an ecosystem. So many companies are involved in building data centers, not just GPUs, but you'll also have companies who are in building racks and cooling, heating and cooling, right? HVAC, and some could be involved in the in networking. Networking is what picking up a lot of steam right now. Like some of the companies who are into networking, copper is hitting the limit. Copper only gives you certain bandwidth, but if it is fiber optics, then you can exchange information a lot more faster. all this AI consumes a lot of data, right? So it takes different communication protocols, and everywhere it's looking for an upgrade. That is where the photonics is coming into picture. So Credo is one, Astrolab is one. There are a bunch of stocks in this category, but all are way extremely overbought. Way
Arista.
extremely
Did you
overbought.
check Arista?
Yeah, Aristanet too. So if you
Oh
see here,
man.
this thing, it is up 500%, 450% light. Okay, this is into optics, photonics. And the other one is Coher. You must have heard about from NVIDIA when they made an investment into Coher. This is also 200%, right? And memory shortage, SNDK, right? This is like this is one of the historic one, 1000% or so, right? So yeah, 1300% for SNDK. So things are overheated in terms of in the short term or also in the long term, right? Despite of their earning promises, right? So yes, SNDK is going up because they have huge edge in memories, and they're running on shortage and they are sold out for 2028, and actually customers are queuing up for their products, right? So that means they get to charge more money for their products, so that means they get to keep more money. They're making more profits. That's why the company is going up and up and up. Same story with Western Digital and Seagate, right? Same story like this. So biggest theme right now is memory, photonics, data centers, overall semiconductors. And if you see the weightage of this current move since last 15 days, they are the one which are the carrying the whole weight of the market, right? Semiconductors, and they are all looking extended 17 days, which is like ridiculously bullish. So it is due for a pullback. So I'm expecting it to pull back somewhere around 464 over the period of next week. And I could be wrong again. But this is what is going to happen at some point, if not next week, following week. Okay. So the reward right now is not on the bullish side, it's on the bearish side or sitting on the side, right? Sidelines, not doing anything, just sitting on the sidelines and wait for the opportunity. If it pulls back to 464 or this level, right? Yeah, you will see like world will people will portray it as like yep, next bear market started, and then entire your information feed in Twitter or YouTube is going to be all the bearish stories. That's when you will know that yep, we are it could be done, it could be over, right? When you see that information flooding your feeds, that's when you have to understand that contrarian theory, right? You have to think like a contrarian and say like okay, now it's time to look for bullish conditions. Okay, so this is what the level I'm expecting to go down for semiconductors. This is the ETF for tracking semiconductors, right? SMH, and everybody's familiar with Soxel. This is a 3x of that. Okay, but if it is Soxel, then 95. Below 100 is what I'm expecting. This is overheated right now. We are expected to pull back. Okay, then that is healthy. If it is pulls back, then that is healthy. If it is keep going up, then big crash will appear, which could potentially will look like this, right? This could be, it could appear like this, right, which is bad, right? So your price crashes down. And anyone who's familiar with the car story, you don't want to look like this, right? So if it is going up crazy, then know that it is not sustainable. It's going to crash. So Soxel right now or semiconductors right now behaving the same way. So I'm expecting it to pull back. Either pull back in terms of time, like over the period of time, you'll see this is like what is that? Yeah, it could be something like this. This is nice. If this happens, price is going like this, it is nice. Then you could expect moving higher. If it is not, then you'll see this, right? So which is bad. So two possibilities, either this or this. If this happens, then we are still rocking bullish conditions, which is good news. Then you can expect it to go higher. If it is going down, then it will spend a lot of time here, base here, and then probably start moving up again. Okay. So it's going to be a long story if it goes down. So that's the two possible ways I'm expecting in the market. Again, I'm looking forward what's going to happen. No predictions here, but these are the two probabilities that can happen in the market. Any questions, any other topics? Put it in the Discord, like if any specific topic that you want to cover in the next week or during the weeks, so that I can come prepared for those topics. Okay. If I don't
Yeah,
have the data, then I'll pull the data. Yeah.
Is it the same time every week?
I'll try to keep it same time. If that way it becomes predictable. Yeah.
Okay. Thank you.
Don't forget to submit your topics. That way I'll know what you want to learn, right? So even if it is a basic, again, we all started somewhere, right? So that's why I keep saying, like, even if it sounds lame, but it's not. Nothing is lame question. So feel free to ask those questions, and nobody's going to judge you. If somebody judges, then we'll talk to them. Hope this call helps. Thank you all. That's all
Yeah,
I
this
want
was
to cover.
helpful. Thanks,
Yeah.
Abhi.
Thank you, Abhi.
Yeah, bye.